Hello and welcome back to the Note. Well, now we know the Fed didn't raise rates and it was rather more dovish about the future than people thought it was going to be. In particular, it said that it was taking international developments into account, obviously code for China. Now, as a result of this, we saw the dollar weaken fairly noticeably against its major trading partners, although not very much, perhaps surprisingly, against emerging markets currencies. We saw 2-year bond yields come down very sharply and also 10-year bond yields. This was a surprise for the bond market. Very much more surprisingly, stocks actually ended the day down slightly, perhaps because markets were unnerved by the way in which the Fed is now not only data dependent when it comes to US data, but also perhaps dependent on what happens in China. Now let's take a look at the overall probability of a rate rise in the future. This is derived from Bloomberg's calculations of implicit probabilities from the Fed funds futures market. It shows you the total chance that rates will be above their current level between 0 and 0.25% by the end of the year. At the beginning of the year, it was deemed virtually certain, more than 95% chance that rates would have risen by the end of December. As of today, that chance has dropped to slightly below 50%. We are now back in a total toss-up, as far as the market is concerned, on whether the Fed raises rates in December once more. So we are now in a situation where I gladly said yesterday that I would no longer have to do any prognostication on whether the Fed raised rates this month. I fear this is the beginning of a long process of prognosticating over whether the Fed will raise rates in December. My heart is not glad at the prospect.